Yo, what's up? Monday, October 27th, the last week of October. Halloween on Friday. All right, we had a good, strong rally today. Folks, maybe you remember early October, I said that we were going to have a tax drain on the 15th. And then I told you there was a window where the market would bottom. And I gave you the dates from October 15th to the 20th. So I said in that period, if we have a pullback, which we did, that was a buying opportunity for the market and it was going to go higher. That's number one that I told you guys. Okay? And that happened. Number two, I've been telling you guys that investor sentiment is too bearish. It's going to have to unwind. All right? I mean, they're just like, we're at all-time record highs, and the AAII weekly survey, bearish sentiment is something like almost like 40% over the historical average. It's too high. I don't know why people are so negative. And I said, that's a contrary indicator. Okay, so I told you guys that we're going to go higher, and I said that we're going to get to a situation where that bearish sentiment is going to flip around into very, very extreme high levels of bullish sentiment before this thing is over. All right. The other thing is we got a rate cut coming up on Wednesday. Again, it didn't make sense to me that everybody was so bearish and we have a rate cut, because you know how people are. Like when they hear, that's all they talk about is rates, rates, rates. And so for all these people out there, cutting interest rates, that's like the panacea of all time. That's like the most bullish thing that they could possibly think of. And so it didn't make sense that they were so bearish. So when they cut the rate, when the Fed cuts the rate on Wednesday, I think it's just going to trigger another big rally, an extension of this rally. As far as the flows are concerned, and this is another thing I've been telling you guys, we've been running equal with last year, slightly above in terms of leading flows. They're like 8 billion over last year, which is not a big deal. So basically we're like I've been saying, we're holding the baseline of last year, which again, we did 7.73 trillion of leading flows. And I keep telling you that as long as that stays along that baseline and doesn't start to drop, I'm going to kind of not ignore, but I'm going to discount a little bit the fact that net government transfers, they're dropping. I told you guys, they're down 62.5 billion. And we're what? We're 2.5 weeks, 3 weeks into the fiscal year. They're already down 62.5 billion. It makes me a little nervous to, kind of push that aside. But I've been telling you guys that because of the sentiment situation and because of the rate cuts, and rate cuts do, even though I explained how rate adjustments impact the economy over time, right? They're fiscal adjustments. I do admit that rate cuts have a positive impact to financial assets in the short term, because what happens is it adjusts like the discounted forward cash flow. All right, so that stocks reflect that they go higher because of increased forward cash flow because of lower interest rate cost. It's a mathematical formula that financial analysts use And it does make sense. I mean, the only thing I've argued that what it doesn't include in that formula, and I've said this in the past, it doesn't take into account the fiscal aspect that the rate cuts are going to reduce national income, all else equal, of course. And that formula doesn't factor that in. That's how come everybody got it wrong. Not me, but everybody got it wrong when the Fed was raising interest rates, when they said there was going to be a recession. I said, I said that initial drop in stocks based on that forward discounting cash flow effect, once you reach the inflection point, then we're talking about massive interest income transfers into the economy, which is exactly what happened. And I made that prediction all the way back in like mid 2022, even before in late 2021, even before when the Fed started to raise rates. I made that prediction. I said, that's how it's going to play out, I said. And that's how it played out. Okay, so that's the scenario. Now, November 14th, because the 15th falls on a Saturday, November 14th, we're going to get a quarterly interest payment. That will mark the peak of the fiscal flows in this cycle. When I talk about cycles, I'm talking about these quarterly cycles that include, tax drains and then interest payments. So from the 14th till maybe the window could extend till around the 1st of December. I don't even know if it's going to go that far. That's going to be a peak or a correction window for the stock market. Now, this correction window, we got to pay attention to what's going on here. And I've been telling you guys about it. And some of you, you want clarity, like, is it going to do this or is it going to do that? Just tell us. Sometimes, like I tell you guys, we got to wait to see more data, more evidence. It's like, you're a detective out there trying to solve a crime. You got some pieces of evidence, maybe points to one suspect. You got other evidence, maybe points to another suspect. It's not clear yet. So I don't like this drop in net government transfers, and that's going to continue. That's not going to get any better because the tariffs, they keep sucking away income. All right? That's going to get worse. Leading flows, I've been telling you, I'm looking at leading flows, and I'm not at the moment very concerned about net government transfers because, the swimming pool level, water level is coming down. I'd say right now, it might be at the level of the skimmers on that pool, not below, but it might be midway into the level of those skimmers. So we got to pay attention. I mean, if you work it out over a year, if we're doing 35 billion drain a month, that's 420 billion annual drain. You're below the skimmers. We're in recession territory with that. But what I mentioned the other day in my video was that some of that, maybe all of that, could be offset by a shrinkage in the U.S. trade deficit, current account deficit. In the first quarter of 2025, that deficit shrunk by 190 billion. I mean, all you need basically is 2 quarters like that, and you have pretty much almost offset the negative impact of the tariffs. So that's very, very impressive. Unfortunately, now with the government shutdown, the Bureau of Economic Analysis, they're not releasing that data. So we don't have a lot to go on. I mean, I'm looking at petroleum exports, which are going up. That's something, but other than that, we don't have a lot of data to look at. But I suspect that the trade deficit is narrowing. And that is good because that's going to be an offset to the tariff drain. That's how it's supposed to work. That's economics 101. That's macroeconomics 101. That's how it's supposed to work. And frankly, not frankly, but honestly, I still say that the most obvious trade right now to me, the one that really nobody's paying attention to, which is like low-hanging fruit, like diamonds sitting there on the sidewalk that you could just go over and pick up. That's treasuries, because the Fed's going to be cutting rates when we see a slowdown in economic activity. They're going to keep cutting rates and treasuries are going to zoom. So that's my update today. We have a little bit of inclement weather here where I am in Florida. Got a major hurricane impacting parts of the Caribbean. Jamaica looks like it might get a direct hit from this Hurricane Melissa, Category 5. If any of you are in Jamaica, stay safe, man. Stay safe. Thinking about you. Anyway, that's it for today, folks. The market's got momentum here. We're going to get an unwinding of the bearish sentiment. I'm telling you, when this thing, by the time November 14th or whenever, the end of November ends up, because I'm giving you that window, we're going to have a peak in the flows of this for this cycle. By that time, sentiment is going to be way higher on the bullish level. Believe me. So, and again, I follow this every day. I get the numbers every day from the Treasury statement. So nobody can update you like I can. Nobody. I'm sorry. And it's not just the MMT understanding, which I put myself up against any of the, the MMT academics 100%. I could go toe to toe, but it's also my background as a trader. And the mental game aspect, all that stuff. Nobody does what I do. Nobody does what I do. So you need to be here and you need to subscribe to my report because I'm sending out emails all day long. Okay, so that's it for today. Thank you for watching this. Please like and subscribe and go to my website, pitbulleconomics.com, and sign up for a 30-day free trial to MMT Trader. You need it. All right, see you tomorrow. Bye.